are certain people who by their actions, decisions, or lifestyle have managed to shock the world. And today, we are going to look at a man who did just that in the world of stock market trading. In this episode, we will be looking at the life of one of the greatest traders of all time. A man who many call the most successful trader who ever lived, but also the father of modern-day hedge funds. This is the story of Jesse Livermore. So let's begin. It all started when he was just 14 years old. He had already been kicked out of school and was working as a stock messenger boy on Wall Street. As a messenger boy, his job was to run up and down the stairs carrying stock orders for brokers. At first, he was paid $6 per week, but soon increased to $8. But even though he was making enough money to support himself, his mother refused to let him move out and claimed that she would kick him out if he did. He started to work on the trading floor as an office boy and quickly became known for his ability to grasp new concepts quickly. At age 17, he became the youngest member of the New York Stock Exchange ever at the time, and got his own seat by borrowing money from his mother. His mother wasn't too happy about this, but ultimately agreed. After some convincing, as soon as he had his own seat, he began making money immediately. He used the tape system and watching order flow to find profitable trades. He then developed his own style of trading, which has now become very popular among traders. This style is commonly referred to as Livermore's method. After just 6 months of trading, he made enough money to pay back his mother and keep $2,000 for himself. In the year that followed, he earned more than $30,000, which in today's money would be more than $1 million. Unfortunately, he lost almost all of it in a downturn. But in 1907, something big happened that changed the course of history and gave Jesse his first huge fortune. It was during this time that J.P. Morgan played a major role in averting a financial disaster. J.P. Morgan was a banker who saved the U.S. economy during the Panic of 1907. He took his personal wealth and bought stocks to stabilize the market. This event solidified his legacy as a great American hero. But for Jesse, this created an opportunity of a lifetime. When everyone else thought the market was heading for certain doom, he knew it was actually about to enter a bull market. He borrowed $25,000, around $800,000 in today's money, and invested it all into stocks. He held on for 2 years until the market bottomed and then sold off, making a profit of $100,000, the equivalent of over $3 million today. During World War I, he continued to make good money by trading on the war news. After the United States entered the war, he met with President Woodrow Wilson and offered to help the government by buying all of their Liberty bonds. He later revealed how he used this meeting with the president to make millions of dollars. In 1915, while most traders were making money on war speculation, he was the only one who correctly predicted the armistice. Due to this, he was able to sell before the crash and protect his capital. As he grew older, he started to lose interest in the stock market and instead focused on real estate development. During the Great Depression, he was close to bankruptcy, but thanks to a last-minute deal, he was able to stay afloat. His second wife was a former Ziegfeld girl named Mary. They had 2 sons together and lived in a mansion in Connecticut. Despite being rich, he often gambled away his money. And despite being a Yale graduate, he often expressed his regret about not finishing high school. He once said, "I know the world is full of people who never finished grammar school and couldn't write a sentence, who are worth 10 times more than I am. And I ask myself why. I went to Yale and didn't get anything out of it. I might have been better off not going." Although he made a fortune in the stock market, it wasn't without its losses. In 1929, he lost $1 million in one day. That's the equivalent of more than $20 million today. Despite this, he remained confident in his ability to make money in the stock market. He once said, "No man can make money in stocks if he does unfully realize that there will be times when the tape will be against him. Unless he can stand it, he won't stay long enough in the game to make money. He was right. While other investors lost everything, he was able to keep some of his capital intact. In fact, he profited from the crash by shorting the market. But due to the lack of margin rules and a high short interest, the brokerages refused to take his money. This caused several brokerages to fail and opened the door to more panic selling. When the market rebounded, he missed out on the rally because he was still trying to buy stocks from the brokers who had failed. He once said, "If I had only known that the market was going to go up, I would have taken a seat in my office and thrown confetti." However, he was still considered one of the wealthiest men in America, so he wasn't doing too badly. During the Second World War, he served on the board of the U.S. Shipping Board and made more money by trading on the war news. He continued trading until he was 80 years old, although he did cut back during the Korean War, as he found it upsetting. He passed away in 1940 at the age of 80, leaving behind a complex legacy. Despite his success, he was a gambler at heart and lost large sums of money at the roulette table. He also cheated on his wife and had several mistresses throughout his life. So what can we learn from this larger-than-life character? Well, first of all, he was a firm believer in the power of supply and demand zones. He used to say, "Whenever a trend is about to change, the tape will tell me first." He was also a fan of supply and demand areas, and used these to identify when a trend was about to reverse. He was also a pioneer of the theory of contrarianism, which is the idea that you should do the opposite of what the majority is doing. He famously said, "Be stubborn like a mule and fearful like a rabbit." He believed that the majority of traders were wrong most of the time, and that if you went against the crowd, you were likely to make money. In addition to this, he was a master of risk management, and often used protective puts to limit his downside potential. He believed in cutting your losses and letting your winners run. This is a strategy that many traders still use today. Finally, he was a true professional and understood the importance of keeping your private life separate from your trading. He once said, "The first thing a man should do when he goes into business is to separate his business from his personal life. If you have any decent-sized account, you should do likewise." So there we have it, the story of Jesse Livermore, one of the greatest traders who ever lived. We hope you enjoyed this video and learned something from it. If you did, please leave us a like and subscribe for more videos. Thanks for watching, and until next time.